Welcome to FT Markets. In the UK, house prices are starting to tear ahead again, even though wages are still pretty stagnant. That has prompted some people to talk about another housing bubble, but I'm joined today by Kevin Daly, senior European economist at Goldman Sachs, and he thinks houses are actually undervalued in the UK. Kevin, surely not. First-time house buyers are spending sort of 5 times their incomes now on houses. In what sense is that undervalued?
The turnaround in the UK housing market has certainly been striking. This time a year ago, outside of the London area, prices were stagnant. Housing activity was very weak. Confidence was very low. You wind the clock on 12 to 15 months and prices across the nation have risen by around 10%. Housing transactions are up 30% and confidence is roaring ahead. You know, the reason for that transition I think is pretty clear. It's been predominantly driven by the easing in credit availability and mortgage availability. What hasn't responded over that period in the same way has been housing supply. Housing home building in the UK economy remains, although it is beginning to pick up, remains very stagnant, very low levels. And it is this lack of supply of UK housing that lies at the heart of our view that actually house prices remain somewhat below fair value.
Okay, so let's look at your first chart, which I think speaks to that issue. So what do we have here?
So this shows housing completions going back to the 1850s. You can see that outside of the 2 world wars, housing completions have fallen to the lowest level since the 1920s. It really, you know, this is, although completions have been, you know, very, very particularly weak recently, actually they've been falling for some time and had been actually too weak for some time.
And I think your second chart speaks to that, doesn't it? That actually, you know, in the US we saw that there was quite a big housing boom and then a housing bust. In the UK, there wasn't even a boom, was there?
Well, this is it. I mean, the UK, at least as it relates to housing supply, it has had a bust without a boom. In the US, you had, you know, house prices rocketed, but housing supply responded very sharply to that. There was a big increase in houses to the number of houses to households ratio already from a higher level, whereas in the UK this didn't respond during the boom time, and more recently it has been beginning to tail off again as home building has collapsed.
So how do you get from this picture of sort of chronic undersupply to your particular calculation about how undervalued houses are?
So the way we like to value housing is to compare the rental yields with the long-term cost of borrowing. And I think if you can move on to the next chart, we can see that whereas, you know, you said in the introduction how expensive housing become. I mean, this chart really I think gets at this, is that house prices as a ratio of average earnings remain 40 to 50% above their long-term average, which leads many people to conclude that house prices remain overvalued. The point of this chart is to say that actually rents as a ratio of average earnings remains just as high above their long-term average. In other words, reflecting the chronic undersupply of housing in the UK, whether you rent a home or whether you buy a home, it is very expensive to live in a home, essentially.
Right.
So it doesn't reflect speculative behaviour that is boosting a bubble in houses. It reflects the fact that actually there is a chronic undersupply of housing. So another way to put this chart is that rental yields, if I took the ratio of rents as a ratio of house prices, rental yields remains broadly in line with its long-term average, despite the fact that borrowing costs in the UK economy, as elsewhere, of course, remain very low. So if you compare the cost of how it costs to buy a home with debt relative to the cost of renting an equivalent home, actually the gap in terms of making it more attractive to buy relative to renting a home has never been higher, because it is so cheap to borrow funds for those who can, of course, access mortgage finance. So this really lies at the heart of why we think house prices are undervalued. And given the momentum in prices you see now, we see pretty significant gains in the months and years ahead. So we see a 10% rise over the course of this year. And under reasonably optimistic scenarios, I think prices could rise as much as 20% in total over the next 4 years.
Okay, well, as a someone who's not yet on the housing ladder, I say that strikes fear into my heart, but how will the Bank of England think about this? Is this prices going up, is that good news for the economy? Is it bad news? Will the Bank of England need to think about doing something about this?
I mean, well, one of the, I should say in the forecast, like any house price forecast, because momentum plays such an important role in driving that forecast, is that any forecast, although this is, I think, a good central estimate, can be knocked off path by events. And one of the events that could knock it off path, our forecast off path, is if the Bank of England takes significant action to cool the housing market. I think they will be concerned, not because of house prices per se, because as I say, I think, I don't think they're overvalued yet, but because of the impact that it'll have on household leverage and the resilience of the banking sector. So in our view, I think they will, through the Financial Policy Committee, begin to take actions through tightening lending standards, through so-called macroprudential policy. It's our view that you're likely to see such action later this year, and possibly as early as the June FPC meeting. If I can leave you with one last thing from my side, is that it would be our view that to the extent that the Bank of England tightens macroprudential policy, more on the macroprudential side, all else equal, is likely to be less on the conventional monetary policy side. So it feeds into one of the reasons why we, relative to the market and relative to consensus, believes that official rates are actually not going to rise until the middle of 2015, notwithstanding the fact that action is on macroprudential side this year.
Okay, well, Kevin, thank you very much for coming in. There you have it. In Goldman Sachs' view, house prices are only going to keep rising. And if you want to know what's going to happen next, then the key people to watch are those policymakers in the Bank of England.